Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese. Each week, we dive into the important market-moving events and cut through the noise to help you, as an investor, identify what really matters. Let's get this show started.
Guys, this is an incredibly special, on-location Facts versus Feelings with Ryan and Sonu, searching for Buffett.
That's what we're doing.
Now, when you hear that, that doesn't mean we're searching for a buffet, right? We're actually searching for Warren Buffett.
You're not looking for a buffet here.
Okay, yeah, people might be confused. Sonu, where are we? Tell people where we are.
Omaha. So we're, with Carson, obviously, and, that's... is Carson the most famous name out of Omaha, you'd say?
Right? No offense to our boss, but he's number two. Warren Buffett lives in Omaha, and rumor is, Sonu, he goes to the same McDonald's every day. We are 13 minutes away from 4.5 miles from the literally the McDonald's Warren Buffett goes to every day. We're going to get the Warren Buffett breakfast and maybe even see him because we've got really, really awesome all-day event yesterday and today where the whole team's getting together, a strategy event. And we just want some Warren Buffett magic to rub off on us and make the event all that much better, right? So
the most successful investor of all time, I think that's safe to say. Hopefully that rubs off.
Yes, it is. So guys, we're going to dive in again. We are doing this from a car, as we already mentioned.
And Ryan's trying not to kill us.
I'm trying not to kill us. I got Google Maps down here directing me. So we're gonna have some fun. And normally I joke with Sonu, so I've got like notes in front of me. Normal. This is like shit. We are just going to wing it.
We're riffing.
So obviously, again, searching for Warren Buffett. But Sonu, there's a lot to talk about this week. We're gonna dive in. We're gonna take a look at last week's stock market action. I know we've had China reopening, which is really interesting. So goes January, goes the year. Maybe take a look at the economy and whatever else comes up. So Sonu, I'll start. Maybe I'll give you the question because I got to make sure I know where we're going here. Let's start with China reopening. I think it's kind of neat. You've got some really cool talking points on this. We've seen base metals stronger. We've seen the global stock market doing a lot better. But I've heard that China reopening is inflationary. Talk to me about what you're seeing in the data, and is that even true?
Look, China is the second biggest economy in the world, and how their economy has historically run, at least over the last decade, is they fund investments, right? Mm-hmm. And that's how they build, these glitzy cities. You look at pictures of Shanghai or Beijing, it looks amazing, right? But what does that require? It requires a lot of investment, which means they're buying a lot of raw materials. There's a lot of construction activity. A lot of growth, economic growth in China happens because of real estate, basically. All of this stuff, right? And it feeds on itself. And what have we seen over the last 3 years? COVID hit. So because of that, they haven't been able to do a lot of that. Now we've had inflation, obviously, despite China not growing.
Right.
So that's the other side of it. But you and I have talked about this a lot. Inflation, China shutting down has caused supply chain issues. That's the other side of it, right? If China comes back online, those supply chain issues go away even faster. I mean, those are going away already. Those go away even faster. Yes, there will be more demand for things like, oil is a great example, right? You have a country of more than 1 billion people who have been stuck at home for the last 2 to 3 years, really, right?
Yep.
And if they start coming out and spending and all of that, that's going to have some impact. But I think that's priced in. Markets are not waiting for this data. All of us are looking at the same data, right? They see, Chinese growth did better than expected in the last quarter of 2022. It came in, the economy grew about 3% over the last year. That was definitely much worse than it's done over the last decade, they were growing at about 6% or so consistently. It's like a straight line, right? And over the last 3 years, you've seen all this volatility over there. And I think now the Chinese government is back to, we're getting out of COVID and we want growth. We want to prioritize growth again, economic growth. And I think on balance, that will be good for the global economy. Because look, if the second largest economy in the world is coming out of like this volatility and recessionary type conditions, that's good for everyone else.
Yeah. No, good points there. And again, we saw the start and the stop and the start and the stop last year with China. This time, you hate to say this time is different, right? Four most dangerous words in investing. But we are seeing, again, those base metals, your copper, nickel, zinc, steel, industrials in general, materials, just here in the U.S., material stocks, a lot of things are doing a lot better. So that's a tailwind that we did not have last year, China. Now, here's the update, guys. We're on Dodge Road. We are 9 minutes away from what we're going to call Warren Buffett's McDonald's. Cross your fingers.
Hopefully we see
him. I'd love to buy him lunch. I said it'd be funny if he yelled at us or something.
So here's the thing. Apparently, depending on how rich he feels on the day, his wife gives him more or less money. So this is a few years before egg prices are up. I don't know, whatever.
Yeah, we can't even buy eggs. I mean, my company card can't afford eggs right now.
There you go. Like, you need a credit limit increase. Speaking of, like the government does, right? Yeah. But Buffett's wife gives him either $2.60. This was 3 years back or so, or $3.17 if he's feeling good about if he's making money, and he goes and gives the exact change. That's his breakfast. What, the sausage McMuffin or 2 sausage patties? Or, is that what we're getting?
There's a McDonald's. That's not the one we're going to, though. I think the thing that he always got that I wanted or thought sounded good was a bacon, egg and cheese biscuits. I'm going to go that route.
Right,
but
I'll do the same.
All right, so Sonu, you mentioned something that I did want to talk about. I didn't even say this at the beginning. It's like a bonus. The debt limit. Let's spend just a few minutes on. I'm sorry, the debt ceiling. We've hit
34 trillion.
34.1 is who's counting? We've hit that. Now, the big worry, I mean, what do you mean? You had the data. I think the last 20 years we've increased the debt ceiling 70 times.
Yeah, 70 to 80 times, and, about 40 to 45 times, something like that, under Republican presidents, and, about 35 times, something like that, under Democratic presidents.
So the question, Sonu, that I know most of the listeners who've been around a minute, in 2011, we had these debt ceiling issues. There was a debt downgrade as there was concerns over the U.S. being able to pay its debt. We saw almost a 20% bear market in the middle of August 2011, if some of you remember that. I mean, I don't think I think we're gonna avoid that. Market seems to think that, but we said that in 2011, to be honest, and then boom, the debt downgrade. Is my lane ending? Sonu, my lane is ending. Guys, if you don't know, it's not. No, that's an optical illusion. There's optical illusions in Omaha. Never mind, the lane is not ending. Anyway, back to you, Sonu. Do you think, how is this not like 2011, besides the fact that we're a little bit older and wiser? and wiser. But yeah, you pulled out some great stuff you shared with our Carson partners the other day. What's different between now and 2011?
I think the big difference is, look, we had, even back then, the similarity is we had a Democratic president. We had Republicans just took the House. That was back in 2010 election. This time.
Oh, now my lane's in. They're gonna make me turn. Here we go. Let's get over. All right, there we go.
Just make sure we don't go to the wrong McDonald's here.
Exactly.
But look, Republicans. Short story is, I don't think we'll run into an issue on. Hopefully not. I mean, you never know with these things. I think there's a small probability something goes haywire. But I think 90-95% odds. I mean, it's subjective probability, but who's counting, right? I don't think we run into problems simply because back then Republicans had a big majority of about, they had about 240, 245 seats in Congress. So even if, they lost 20 votes, they still could say, you know what, we're not passing the debt ceiling, right? We're not raising it. And President Obama, you need to come and negotiate. That's what happened. And we had austerity. The government cut spending. I mean, they slashed spending over the next few years, which is part of the reason, the economy also, it was rising. It was starting to grow after the recession. And then we kind of hit a funk there for a little bit.
Europe went into a recession.
We had the
Greek crisis.
Debt crisis. Yeah. So there was a lot of talk at that time about, oh my God, everyone's worried about the debt, right? And I'm not saying we shouldn't have been, but everyone is in a recession too. The irony is now, we're trying to slow the economy down, but both parties are not talking about debt in a sense. But the Republicans also have a smaller majority, right? They can afford to lose only 4 seats. So you think that about 18 Republicans who won elections from counties that President Biden took in the 2020 election. So there's going to be a lot of pressure. Like by the time we get to, so the U.S. hit its debt ceiling last week or about 10 days ago. But they can do what's called extraordinary measures. So basically push things around, push some paper around here and there, and they can stretch it to about June. Or I'd say, I think we'd be able to stretch it to about July or August. But that's when the so-called D-Day arrives, right? And the U.S. government, Treasury has to balance its books. Treasury has been running a deficit of about average 100 billion or so, right? A month. So the moment they hit the ceiling, they can't go past, they need to balance it. They cannot go into a deficit They can't do deficit spending anymore, right? And think about that. The government pays millions of vendors, right? And all these vendors, the moment they stop getting paid, what are they going to do? They're going to call their congressional representative and say, hello, can you raise the debt ceiling because we need to get paid here? We need to pay our employees, right? So there's going to be a lot of pressure on, I think, especially moderate Republicans. So I think, this thing will pass.
Yeah, Libby Cantrell, friend of the show, right,
Yes.
from PIMCO, she did an awesome note. She talked about in 2010, Republicans gained, I think it was close to 60
seats, yeah.
And this most recent, obviously, midterms Republicans gained, but much smaller than expected. So they had more,
leverage.
More leverage. And then she also pointed out a Gallup poll that showed how many just people, like us, consumers, were concerned about debt in 2011 versus now significantly less. So Washington's had a lot of black eyes lately. We just don't think this is going to be another one. We think, honestly, they're going to punt the football one more time and increase the debt ceiling. Believe me, we're watching it. We're not minimizing it, but that's just kind of where we see things. So, Sonu, update. We are 4 minutes away from searching for Buffett or Buffet. kidding. So I'm in a Subaru, right? And I kind of pick you up this morning, guys. So this is a rental car, obviously. So most rental cars you walk up to and it's like automatic. It just unlocks, when you get close to the door. That's what this one was doing until this morning. I come out and the door didn't unlock. I look at the remote key. There's a lock and there's an open the back. There's literally not an unlock the door. So I did 3. We run around the car. Yeah. I did that 3 times and eventually the door's unlocked. So, hey, I don't know.
It's not warm in Omaha.
Yeah, it's not warm. I'm like, I got to take soda up. I'm running around doing laps around my car and eventually it just opened. So anyway, I don't have a problem with Subaru, but interesting morning. So let's see here as we work our way closer to finding Warren Buffett. We'll talk about the stock market maybe when we get there, and I'll have Warren. The other thing I want to dive into, it feels like every day we are hearing a major tech company, communications company, let's put it this way, winner during the COVID times, cutting employees, right? Yeah, Microsoft, Google, Twitter cut nearly half there's other stuff going on Twitter. But still, lots of companies every day. Talk to me about how concerned we should be with these tech cuts. Will they kind of reach out and go to other parts of the economy?
I mean, for now, look, we are seeing a lot of, these are headlines too, right? You see this on CNBC and Bloomberg and New York Times and the Wall Street Journal. Google's cutting 10,000 jobs. Microsoft's cutting 15,000, whatever the numbers are, right? Now, one thing to keep in mind, they're cutting jobs globally. That's the other side of it, right? And one thing you don't hear, I don't think they've stopped hiring, by the way. It's not like they've said, we have a hiring freeze as well. So we don't know what the net number of jobs are, right? That's one thing. The other thing is, look at the job market, right? If we look at the unemployment rate is 3.5%. Yeah. I was looking at the numbers, Ryan, for people with bachelor's degrees. So you think a lot of people working at Google and Microsoft have bachelor's degrees. The unemployment rate is 2%. Wow. That's a tight job market. Yeah. A lot of people are getting hired, right? That's what we don't hear.
Oh my goodness. I see it. I see McDonald's.
Oh, is that the one?
That's the one.
All right.
We're almost there.
We're almost there, guys. Yeah. And for people with advanced degrees, so the master's or something, a lot of them engineers at Google and Microsoft and places like that, the unemployment rate is 1.5%. So you're talking about a very tight job market, right? And a lot of other companies are still hiring. I dare say even these companies are hiring, So I think a lot of this is to satisfy investors too. You know that. And they're trying to make a big splash.
Google cut, I think, 12,000, maybe 20,000. Sorry if I got the number wrong. But, their stock actually went up late last week.
Yes.
Sam Rowe does amazing work at TKer. I love Sam's stuff. He pointed out, Sonu, that, where do you turn for this, by the way? Just make sure I don't miss my turn. This is a weird...
Oh, there it is.
Oh, there it is. Okay, well, I might have missed it.
I think you missed the turn.
I think I missed the turn. This is what happens when you do stuff live.
But it's Omaha, so there's probably more than one entrance to these things.
Well, hey, there it is. Drive-through. All right, there we go. Anyway, Sam pointed out only 3% of the overall people employed work in the tech sector. And when you look at these cuts these companies have done, it's 5-10% of the workforce, not minimizing it, but it's not enormous. But again, tech is such a small part. So as of now, we're not minimizing it. We're looking at it, but we just don't think it's necessarily going to spread. I mean, Sonu, you're seeing some... Yeah, we're almost there. Now, do you see, what type of car does he have? You have any idea? Who knows? Well, probably a Buick. I'm going to guess a Buick.
Doesn't he buy only American?
Oh, I'm sure.
No.
Yeah, probably. That's true. He did write that article in September 2008, right? Buying American. I forget what I was totally talking about. I'm just so excited looking for the guys. The inside. Yes. Do we see searching Warren Buffett?
Or one of these cars?
I don't know. Should I bump the car and see if he pops his head out?
It's another Subaru in front of us.
Yeah. Anyway, so believe me, we're watching it. We just don't think it's. Oh, now I know what I was going to ask you. But we're seeing big pickups in other areas. So tech is cutting, yes, but I mean, leisure hospitality. You had some pretty good stats on that. How many jobs are adding there, right?
Yeah, all the tech layoffs. I think I forget the exact numbers, but all the tech layoffs that we've had over the last 6-7 months announced, right? They've not laid off people yet. A lot of them are yet to come. But leisure and hospitality, that industry, services spending basically, added the same amount of jobs over the last 2 months.
Is he in this little Fiat in front of us? That's probably way too small. I don't think Warren Buffett. Yeah.
It's Chrysler Fiat. You think Buffett could? That's a potential car, but I just don't.
What do you want, by the way? Do you want the?
I'll take the same thing.
Okay, yeah.
I'll make it easy.
Orange juice and hash brown. Okay.
Are we paying in cash like Buffett does? Right.
Well, I see it's a card. It's all right. Anyway, okay. So good stuff there. We are about to order, so when I order, you guys can actually listen to it. And we'll ask
the other thing with the employment market, if you're talking about an employment market that's about more than 160 million.
Yes.
So keep that in mind when you think about 10,000 layoffs. Every month we see about 1.5 million layoffs usually. All right, let's order.
Hi, what can I get for you?
Hi there. We'll do number 3, bacon, egg, and cheese biscuit. Make it a meal with a hash brown and orange juice. I want 2 of those though, please.
I'll just take 1.
Oh, one's me, one's you.
Okay.
Did you want anything else?
I don't think so. That's perfect. Thank you.
Your total is $17.20.
Thanks.
Please pull forward to the payment.
All right. Well, we got our food coming. We don't see Warren Buffett on location in Omaha.
Still searching.
I think it's Dodge Avenue. The Dodge Avenue McDonald's. All right, so Sonu, let's honor Warren. Talk about the stock market, right? We had 2 1% rallies on Friday of last week and Monday of last week, but the economic data, retail sales, industrial production, weren't very good. But the inflation data continues to be very positive. What are you seeing out there?
No, I think that. I mean, big story is, look, we've had 2 years where...
One second.
Yeah.
Was Warren Buffett here this morning by chance? Did you see him? No, she did not see... Does he really come here? He really does.
This is his favorite McDonald's.
This is Warren Buffett's favorite McDonald's. And he really gets the same thing every day?
Yes.
Really?
When he comes through.
Okay, when he comes through. Yep. That's awesome. Well, we missed Warren, but thank you. Okay, appreciate it. All right, well, there you go, guys. Warren Buffett literally does come to this McDonald's, and he was not here today, so pretty cool. All right, I have no idea what you're talking about. I'm so excited that Warren Buffett comes to the same McDonald's we are. What were we up to?
We were talking about the economy, and we've got some soft data.
Pull around the Saltoon parking lot, please.
Oh, you smell this?
All right.
Now I see why Warren Buffett... I haven't had McDonald's breakfast in a long time. But
same here, man.
Now I see why he does this. And by the way, guys, I don't know if you picked it up. Joey, our producer, picked this up and said, we were talking to a robot when we ordered earlier.
And we were just talking about tech layoffs.
We were just talking about tech layoffs, and we literally just ordered from a robot at the McDonald's on Dodge. So anyway... I totally forget where we were. We were talking about the stock market last week and the economic data, how some of it was good, some of it was bad. What's your take on kind of last week's action there, Sonu, or the recent action, I should say?
I think with respect to the economic data, look, we just released our outlook. It's called The Edge of Normal.
Well, they know that. They listened to our podcast last week. Yeah.
And, I think things are normalizing. Over the last 2 years, what do we see? A lot of, households spend money on goods, right? Mm-hmm. And now they're spending more on services. You and I are traveling. We're here in Omaha. We traveled here to Omaha. It's part of normalizing. We have a big strategy meeting, as you mentioned.
Yeah.
And I think everyone's doing that. They're spending less on goods, and you're seeing that impact on the economy. So goods consumption is pulling back to where it was.
And that'd be like retail sales, right? Like retail sales in general, which was weak last week.
Right. And then industrial production, too. Mm-hmm. I mean, if people are not consuming as much goods, you probably have to produce less of that. Right. I want to ask you about the stock market. Now, we've had a good January so far. Yeah. And speaking of, speaking of Buffett, he said, when others are greedy, you should be fearful. When others are fearful, you should be greedy. So you look at a lot of the sentiment stuff, right? You've talked about that. You talked about the Cincinnati Bengals as well recently in a blog post, which was fantastic. So I definitely recommend folks to go on the Carson Group website and check that out, or Ryan's Twitter feed.
Yeah, it's shocking. We've been doing this, I think, for about 20 minutes, and I didn't even mention the Cincinnati Bengals yet. How about that? But anyway, Yeah, it is fascinating because, there's different things we look at, right? Our friends at TD Ameritrade do something where they take a look at what their clients are doing, like the most bearish since April 2010. I'm sorry, 2020. Put the call ratios have been high, flows, lots of different ways to look at sentiment. But the one I use is just listen. We're up like ballpark 5% on the S&P the time we're recording this in January. Yet every strategist I'm hearing and seeing, they're all saying it's just a bear market rally. They're not buying what's going on. We've laid out why we think we can avoid a recession. We've laid out some potential positives, but when everyone's on one side of the boat, that's the opportunity. Now, what's neat about this, Sonu, the January indicator. So goes January, goes the year. Just one thing to look at.
Okay.
But when January's higher, the rest of the year is up like 12% on average, just the final 11 months. Up like over 80% of the time, the final 11 months, up about 12% on average. When January's lower, like last year, you're up like 2% the rest of the year, up like a coin flip. Here's where it gets even more interesting. When January's up 5%, who knows if it's going to happen this January? I know there's more time. But a really strong January, those returns get even better. All right. So, this is just, again, a nice signal, a different signal than last year. We're seeing leadership from the more aggressive areas, your higher beta areas, even technology. I mean, it's terrible last year. That's doing better.
Semiconductors are doing well.
Semiconductors on China likely reopening. So these are some signals, whereas a year ago this time we saw defensives, your staples, your utilities. Those were the things leading. We are seeing something different. So again, are you going to listen to the market or ignore it? And we're going to listen to it. And guys, by the way, speaking of listening, if you could smell how good this car smells right now, we need to wrap this up because I want to eat some more muffin breakfast. This smells amazing. But anyway, it is really interesting. Let's maybe wrap it up here in a minute or two. Earnings have been so far, Sonu, I think I'd say lackluster. Stocks have done okay, but lackluster earnings. What are you seeing so far out there?
I think part of it is like what we saw. It's headwind from last year, right? Mm-hmm. Things slowed last year. Yep. As the economy slows, and we saw that. We're going to get GDP numbers by the time, this week. So we'll see the economy is slowed, right? We know that. And when the economy slows, that means businesses are taking in less money. And we're seeing the impact of that. And I think we're at an interesting point now where with China reopening, things in Europe are not as bad as it seems. We've talked about, gas prices are down, right? Food prices are down. Hopefully egg prices are on their way down as well, right? Natural gas prices are down, which means what? People's utility bills will be down. So all of which means what? They have more money in their pockets, right? If they have more money in their pockets, that means it's almost like a tax cut, right? Real incomes adjusted for prices is starting to go up. That took a hit last year, right? That's why the economy slowed. This year it's starting to go up. And I think that's going to keep consumption up, and that's good for the economy. So a lot of different things going on across the globe, right? The global economy.
Sure.
I think those are all positive.
One other thing that's positive is, again, U.S. has done so well relative to the rest of the world for a long time now in terms of stock market. All of a sudden this year, U.S. actually is not really leading the pack. I mean, Europe and other parts, we think U.S. is going to come back. But this is, again, a nice sign that there's broader participation. I talked about the broad participation last week on the podcast with all the different stocks that have been going up versus down with wildly bullish future results. So, again, all these things are swirling, but more positives and negatives. And, again, we are on location. This week's very special Facts versus Feelings podcast with Ryan and Sonu, searching for Buffett. Next week we'll be in the studio. I don't know. This was fun. So hopefully the audio quality was good and I didn't kill us. Although that one time that road changed, I had to turn real fast. But anyway, so everybody, thanks for listening to this one. This was a fun one. We're going to continue to have some fun on this podcast, and people seem to like it, and we're going to keep doing it as long as you keep listening. And with that, how excited are you to eat? This smells amazing.
Very much.
Yeah.
Let's do it.
All right, we'll see you by next week. Take care. Bye bye. Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.